One of the hardest emotions for people to deal with is regret. We all know we can't go back in time, so sometimes this regret will lead to poor trading decisions in the present. What if you had a system in place to deal with this problem? And what if that system allowed you to capture large moves in the most volatile stocks? I can offer you a solution to both of those things. If you're interested, stick around for this video. I'm Steve Spencer. I'm a partner at S&B Capital, proprietary trading firm in New York City, where we trade stocks, futures, and options. At least once a week, I hear from someone who tells me about their regret of missing a move in Tesla. I get it. It's tough. You were watching a stock or you were long a stock from a good price and didn't take advantage of the opportunity. I decided recently to share an idea for buying Tesla if it had a pullback. Here is that tweet. This is one of several techniques that I will use to buy a strong stock on a pullback. The technique that I used here in this example is finding a previous high where the stock had pulled back from. I also drew a trend line on the 30-minute chart going back several weeks, capturing the breakout from 430. You can see pretty clearly there already have been two pullbacks when Tesla had moved up quickly from the trend. The most recent pullback was from 540 to 500. Buyers stepped in at 500 and resumed the uptrend. The uptrend actually accelerated when it got above 540, so that 2 days later, it was topping out almost at $600. This had the feel of some funds with large short positions covering their positions. That tweet was Thursday morning. The market gave us a gift Monday morning. We were gapping lower because of fear related to the spread of the coronavirus. Because Tesla is such a volatile stock, it will almost always gap significantly lower when the broader market has a large overnight gap. Here was the follow-up tweet from Monday morning, about an hour before the market opened. So let's look at a chart actually from the day of the second tweet when Tesla was trading down to 540 in the pre-market. As you can see, I've marked a couple of areas in the pre-market where the buyer stepped in at 540. Also, I've labeled points 1 through 4. So when we're thinking about this setup, the interesting thing about it and the great thing about it is, bigger picture, this is a stock that's extremely strong. It's probably one of the 5 strongest stocks in the market right now. It's a stock that many people have missed. They didn't buy it when it gapped up from earnings at 300. They didn't buy the breakout above 430. They missed the move above 500. But in a strong stock that has upside momentum, pretty much it's never too late to look to buy into a pullback to a recent breakout area. And that's what we had here. And the other good thing about it is, when we're talking about it in the morning meeting, we have traders who are going to be looking at this and trying just to capture a move from 540 maybe back up to 550 as an intraday scalp. We have other traders who are trying to capture the pullback to 540. They may want to capture a swing position back up to 560 or 570. We have other people who think that this is in an uptrend. If I can buy it on the pullback to 540 and it closes above 550, perhaps I'm going to hold this until the longer term uptrend on the daily chart is broken. So this is a setup that can be used pretty much on any time frame that you're trading. And what we're doing here by zooming in on the intraday chart to the open is talking about techniques that we use on our desk on a regular basis to enter into some of the strongest stocks, the stocks that have momentum to the upside, and that have significant upside because of kind of the nature of these things. So looking at the chart, we see points 2, 3, and 4. One thing that we would like to see is when it's come into our area, that 540 area is the area that we've identified. It's the prior breakout area, the 30-minute uptrend that we showed you on that second tweet that I sent out at 8:30 in the morning that showed that the uptrend had actually caught up to that area. But one thing that we would like to do, we want to get long something that's pulling back on the lower time frame. Even though it's in a higher time frame uptrend, we want to see it bounce from that area. And the reason we want to see that is the reason that technical analysis works, and I'll do another video on this in the near future, is because people are looking, there's supply or demand at the prices that you're looking at. And so my expectation is that there's going to be demand at 540 for this stock when it pulls back because it's in a strong uptrend and people are looking at the same charts that I am. Hedge funds are looking at the same charts, and when they see it pull back to 540, they're going to use this as an opportunity to get long. So the first sign that this might be right is in the pre-market. I've circled 2 areas. It's already been bought at 540 twice in the pre-market. So people are looking at that area already. Our next point of confirmation is when the market opens and the volume goes up significantly, what happens? And so generally when in a bounce scenario like this, one of 2 things will happen. We'll get a quick flush on the open below the potential support area, but in the next 5 or 10 minutes after the market open, it'll be back above and we'll continue higher. Or right on the open, it just will go. We'll go from 540 to 545 or 550. And once it does that, we know that, and we see heavy volume right there, big volume spike right on the open, that people are looking to buy this. There's significant buyers coming in on the open with heavy volume. And so that brings us to point number 2. Point number 2 is at 545, and the reason why I chose that as a potential spot to get long if you didn't get long right in the open is the initial drive took us up to 550, it pulled back very quickly to 545, it caught a bid, and then went to 552. So I know after the initial opening drive, the pullback low is what we call that, was 545. So half hour later, when it pulls back to that 545, that's a spot where you can have a bid. Your risk is about $1 there. And what you're looking for is for it to move back up to 550, hold higher, and then continue to trend up. In this case, you can see it bounced from 545, but it failed actually at 550. And potentially, if that was your trade you were taking there, you would have been stopped out when it got below 544. Now, some traders who are looking from a bigger picture perspective might just use that pullback to buy at 545, sell half at 550, and then move the stop down below the low of the day, and so they're still in for half the position. Point number 3 is actually a technique that I would use. I think it's less common, but I wanted to bring this point up to you, which is as it moves below 545 and starts to get closer to 540, I'm going to look to see on the tape if it starts to move sideways, and we did actually see that at 542. The pullback low from 550 after between 2 and 3 was 542. It popped up a little bit. It couldn't get back above 45, but it came back down to 542 again, and it held there again. And so I'm not going all in full position at that point, but I'm going to nibble if I see buyers on the tape there at 542, and I'm going to use that to start to build a position. If it pulls in more, closer to the 540 level, I'll just get bigger. Or if it starts to move back up above 545 and starts to hold above there, that would be point number 4, where people would potentially be looking. It's back above the pre-market resistance. It's now starting to break the intraday downtrend, pullback trend, and it's also starting to hold above view up. That would be point number 4. And then eventually, once you're in from point number 4, I think eventually this ended up trading back up to 560 or 565 or something like that. But the point is you want to have multiple ways where you can get involved when it has this pullback. From I think it was 595 was the top around there or so, in the 590s, maybe low 590s. When it comes back down here, you want to have these techniques where you can get in when the trade starts to work. You can stick with it for a much more larger move to the upside. And remember, this was on Monday. They reported after the hours. They reported after the close on Wednesday. So by Wednesday midday, the stock had gotten back up to around 585 or so. So it had bounced $45, and most traders would take it off at that point, not taking the earnings risk into the trade. So I want to give you a second example. But before we get into the second example of what is probably another one of the top 5 stocks in the market, I wanted to let you know that all of the traders that we hire for our desk are required to go through an intensive mentoring program prior to their start. We call it the DNA program. We actually are running a 2-hour free workshop where we teach the core topic from this mentoring program. It's how to identify the best risk-reward stocks to trade each day. In addition to that technique, we also teach you 3 of the trades that we use on our desk, the lowest risk, highest reward trades. And you can understand our process better and learn some more about the mentoring program that all of the traders that we hire for our desk go through as well. If you're interested, click on the link above or go to tradingworkshop.com. All right, so let's take a look at the second example of a very strong market leader. This example is actually one that I had missed a huge move in early 2019. The ticker is SHOP, S-H-O-P. We came up with a plan on how we would trade it if it came back down to our buy area with options. It's a momentum stock similar to Tesla. In fact, on a percentage basis, it's up a lot more than Tesla since the beginning of 2019. So let's take a look at the chart. So you can see in early 2019, this was a $200 stock, and it actually consolidated between March and April, and it broke out in April very slowly, and then in May, I guess that was probably an earnings report, it broke out from 240 and started this big uptrend. We're looking at a daily chart right now. So I missed it. I wasn't involved. This is kind of the opposite of Tesla, where I'd been in from like the low 200s. This one ran from 200 to 280. I missed it. I think people, I don't recall, I don't think I was even in on the breakout above 280. We saw it go from 280 to 330, and basically what we had said was, let's make sure that we don't miss this if it pulls back to the uptrend on the daily. And so you can see it had a red day where it went down to 315. The next day it gapped down to 310. And we had a plan that basically if it came back into the low 280s, we would sell the 275 puts, or maybe it was the 270s, this is a while ago, and we would buy the 300 calls. But the technique that we're using there is it's a great technique to kind of take advantage of an increase in volatility. When a stock pulls back like this from 330 very quickly into the 280s, the puts increase very quickly in value. So if we sell the 275s or the 275 puts, that basically creates an artificial long, meaning that if the stock traded down into the 260s, we'd be long the stock. If it doesn't trade down there, we collect the premium for the puts that we sold, and at the same time, if it bounces back up to 300, we bought the 300 calls, which will increase in value. And the way that we trade this typically is, we got really, really lucky on this one in the sense that it came to the uptrend line, it never went below 280, the next day it started to bounce. When it got back up to 300 or 298, what we'll do is we'll short 25% of the call position, so that way if it rolls over back down into the 280s, we'll make money on the short position, and it'll cover the cost of the calls that we bought, the 300 calls. In this case, eventually trended back up to the high. We got flat until I think 320 or 325 or something like that. So the great thing about something like this is in a really strong stock, when you move out into further in time, what you'll see is, you can see we pulled back there, it traded up to 330, it pulled back I think to about 310 or so, eventually went higher, but a few months later, what happened again? It came back down to 280, so we put the trade on again, and then on the third time we put it on again. And so once we have an area where a stock has a significant bounce, and the reason why I wanted to share this even longer time frame chart with you in Shop is you can see that initial trend where we got in on, eventually it broke to the upside and made a new high, and I think it went up to about $380 or $400. If the pullback trade the second time, it's a different trade, right? Because it's not in an uptrend any longer. But what we know is when it put in its all-time high there at 330 or 335 or whatever it is towards the left side of the chart, and we bought at 280, it actually made a new all-time high and went to $400. And so the trade when it comes back the second time in September, October is a couple of things. Number one, so we always want to buy in areas, horizontal support areas, where we had broke out from and pulled back and then made new all-time highs. It also, when a momentum stock runs up like this to 400, one of the most common areas where people will look to buy it on a longer term pullback is a 30% pullback from the high. And what is 30% pullback from 400? That is 280. It also lines up with the 280 where we bought initially in June. So that was a great spot. We bought it again. We got flat when it bounced back into the 320s. The third time was a little bit dicier. The reason it was a little bit dicier is you can actually see a downtrend is starting to form. And so we did it again. We took the trade again because we're in a bull market and things, the market is still very strong, but it was the riskiest trade of the three. But at the same time, we went to the well again. It worked again. And it actually led to it making a new all-time high. And now as I'm talking about the stock, I think it's like a 470 or 480, 476 today. And so this is a technique. This is like a great, this stock went from 200 to 330, went up 60%. We were still able to buy it into a pullback in an area where our risk was basically 1% to 2%. The stock ended up running up in the near term 10% very quickly. Over the medium term, about 40% or so, about 40%. And then in the long term, another 50%. And so it's the same technique, and whether it's Shop, whether it's Tesla, whether it's Netflix. And you'll notice my charts don't have moving averages. Fibonacci's or Bollinger Bands or other technical lines. I'm relying on what is called horizontal support and resistance. This really is the most important thing you can learn about supply, demand, and short-term trading. And by the way, at the bottom of the video, if you've been trading these market leaders, these momentum stocks, kind of tell us the techniques you're using to get long on the pullbacks. Tell us how you're using these setups. If you have questions about this particular setup, more details, or if you have an entirely new idea for a video that you thought of just from watching this video or something you've been wanting us to answer, please put it in the comments section. We all learn more from your questions and from your comments from each other. So it's not just about learning from us. We learn from each other.